Have you ever pondered over the inexplicable rise in the price of a cup of coffee that seems to creep up, stealthily but surely, year after year? You might have woken up one fine morning to realize that the simple pleasure of starting your day with a warm cup of java now requires you to reach deeper into your pockets. Have you noticed how the price of that comforting brew has been subjected to a constant and progressive surge, much to your chagrin? Then there's that nostalgic, sweet memory of your childhood. Remember the times when you could get a candy bar, that epitome of youthful delight, for a mere quarter? It was a time when a shiny coin could unlock a world of sugary bliss. The simple act of exchanging it for a candy bar at your local store filled your heart with an unadulterated that only a child can truly understand. Well, those times now seem like a mystical fairy tale, don't they? They belong to a bygone era that feels distant and blurred, almost as if it were a dream. The once affordable candy bar now comes with a price tag that would have made your younger self gasp in disbelief. The reality of this transition is both startling and intriguing. The culprit behind this mysterious phenomenon is inflation. Inflation, in its most basic form, is the rate at which the general level of prices for goods and services is rising. It's a silent assassin, attacking the economy as sound. It has a clandestine yet relentless force, creeping into every tiny corner of our economy, affecting everything we buy, everything we sell, and everything we aspire to own. From the food we eat to the homes we live in, from the clothes we wear to the cars we drive, from the education we pursue to the entertainment we enjoy, everything is subject to the omnipotent inflation. It's like a slow, silent tide, gradually eroding the value of our hard-earned money. Inflation has a direct impact on our wallets and our purchasing power. Each dollar in our wallet, every penny we possess, feels the brunt of this economic phenomenon. It dictates how much we save for the future, how we plan our expenses, and how we prioritize our needs and wants. And yet, there are strategies that can help us conquer this economic giant. Investing in assets that traditionally outpace inflation, such as real estate or certain stocks, can your wealth from the eroding effects of inflation. Diversifying your investments across different asset classes can also provide a safety net, as some assets may perform better in an inflationary environment than others. Keeping a close eye on interest rates can also help. When interest rates rise, it often indicates that the economy is growing, but it can also signal rising inflation. And it's not just us. Businesses, governments, and economies, both big and small, are subject to the invisible hand of inflation. It affects financial decisions and strategies, influencing market dynamics and shaping economic policies. Yet with the right strategies, they too can navigate inflation's choppy waters. Ultimately, the effects of inflation extend beyond just numbers and prices. It influences our lifestyle, our decisions, and our future. It changes the way we perceive value and shapes our understanding of wealth and poverty. Yet with sound financial strategies, we can conquer this silent, yet relentless force that impacts every corner of our economy and every dollar in our wallet. Today, we're going to explore this financial phenomenon. We'll start by understanding what inflation is and what causes it. Then we'll delve into strategies to conquer it, turning this potential foe into a manageable factor in our financial journey. Inflation at its core is the rise in the prices of goods and services over time. Imagine it as a slow leak in your financial boat, gradually eroding the purchasing power of your money. Governments measure inflation through indices, and a healthy rate is usually around 2 to 3%. Anything higher, and our money starts losing its superpowers. Now, you may wonder what causes this rise in prices. The culprits vary from increased demand and production costs to spikes in energy prices. Inflation can also be influenced by external factors like global events and government policies. The key is to understand these triggers to navigate the economic landscape effectively. But fear not, there are strategies to shield your finances from inflation. The first strategy is to diversify your investments. Don't put all your money in one place. Spread it across different assets, like stocks, bonds, and maybe even a sprinkle of cryptocurrencies. The second strategy is to invest in assets that traditionally outpace inflation, such as real estate. Lastly, keep an eye on interest rates. When inflation is on the rise, central banks may increase interest rates to cool things down. Stay informed and adjust your financial strategies accordingly. To sum up, inflation is a rise in the prices of goods and services over time, caused by factors like increased demand, production costs, and global events. But with a diversified investment portfolio, investment in assets that outpace inflation, and a close watch on interest rates, you can navigate this economic landscape effectively. Remember, financial literacy is your superpower in this economic adventure. Until next time.